All these rejections from the middle Bollinger Band.
Resistance we're going to need
If you actually see here, we get a
And we'll look for a healthy higher
I
low.
would not
Don't have
be
the bull
eager
market
to enter a
across
long trade.
Hello crypto friends, hope you're doing well. Settling into a new location. We'll figure out the lighting and the background and all that over the coming week. We're going to be checking it on Bitcoin, Ethereum, Litecoin, and BCH. And starting with the weekly time frames, we have an inside bar forming on Bitcoin to be watching for the coming week. 2 months in a row, 8 weeks in a row of a lower high every single week. So obviously, bulls have to break that in order to see any kind of follow through on any kind of bounce, which we have not done yet at this point. And zooming in on the daily time frame to see how this bounce has played out so far, we have a new clear resistance level, which is the high that we have reached. That's 6,520. We have a daily inside bar forming. You can see the volume is completely drying up. So that's showing us, you know, in a normal instance, if this were in an uptrend or regular market conditions, we'd say this is extremely healthy. You know, sideways consolidation, no big bear volume. Bulls are just fine. But because of where we are coming from in a brutal downtrend over the last 2 months, we are skeptical and extra cautious because we are seeing this kind of action. And it's that slow, drawn-out consolidation without a lot of follow-through. But looking just at the daily chart, the bulls don't really need any follow-through right now. It's not like, you know, we need to see a bull move, otherwise the bears have complete control. It's the kind of scenario where, yes, the bears have the upper hand, the bulls still have proving to do, but we could easily see an inside bar bull break and continuation up to a higher high early this week. That being said, if we see this pattern continue and another leg down below this low of 6,257, then the bulls start to get a little bit concerned because, again, that would mean a lot more upside needs to get, the bulls have to see a lot more upside to break to that higher high. And again, it would be that just long, prolonged consolidation without much follow through. So I would look at this, if you isolate this and give me this pattern on its own, I say this is extremely bullish. But you give it in the context of this cryptocurrency market and you say, we need to be cautious. We need to be careful. If we do see a big drop down over a couple $100s, then that completely erases this move in the sense of putting the bears right back in control. So if you are in positions right now, whether it's day trade, swing trade, short term, long term, or I should say mid-term, you're using these levels. The low of consolidation is a key support at this point. The high of the bull move, or these 4-hour lower highs where we saw these little brief spikes that the bears squashed back down, these are resistance levels that you can be using as a stop loss if you are bearish. So anything under 64.24 is a lower high on this 4-hour time frame as a bear. You can see we had multiple inside bars break bearish. And in terms of support after 62.56, we have to look at the hourly time frame, and it's down here to the initial consolidation of 61.85. I would say breaking 61.85 is a red flag. That's giving back too much of the move for the bulls to be comfortable. We have clear hourly lower highs to be watching. I can pick out 5 of them at this point, and it's just a question of when are the bulls, if the bulls can break these hourly lower highs and start to try and shift back and keep this 4-hour chart looking healthy. It is still healthy, it is still holding exponential support, but another leg down would likely change that fact. So that's where we stand overall. Again, hourly time frame if you're looking at lower highs, but other than that, the 4-hour and the daily have the time frames that we're keeping an eye on. And we're watching, can the bulls break the hourly lower high pattern? At this point, we have not broken the hourly lower high pattern since the initial top of the spike. Everything, actually, I would say since this secondary spike, everything since then has been, you know, clear lower highs without a lack of follow through. So that's where we stand on Bitcoin, Ethereum. Similar, higher low attempt on the weekly time frame. It's not an inside bar. It is a bullish reversal candlestick. The daily time frame, you can see that we topped out at resistance of 462.49, our low of consolidation is support, and a very small inside bar still holding on just fine. The 4-hour time frame is more of an equilibrium than Bitcoin is. I'm looking at the high, the low, lower high, higher low. So I would say right now, and we haven't really formed this higher low clearly yet, so I would refer back to this first one. 440.60 is must hold support. It's a potential bearish entry if we lose these lows of consolidation, and resistance is 455.87. Bulls need to break that level. So same thing, still healthy consolidation. Looks like the bulls, or I should say the bears, saw some more consolidation initially and then recovered a little bit, whereas Bitcoin was a little bit less aggressive on the initial consolidation and now has followed through with a little bit more consolidation. So the bottom line is daily inside bars and tightening ranges are currently still forming. And yes, we do have to see hourly lower highs break for these bulls to be back in control. And you can see just green to red, there's definitely a lot more red hours over the last day or two than there are green hours in a row. Checking in on Litecoin. Same thing with the bullish reversal candlestick on the weekly. Daily chart, not really seeing a lot of follow through. A lower high rejecting from exponential resistance. 84.50 is a double top on Litecoin. That's a clear bull signal. If we get over 84.50, we should see some decent little follow through, although it does depend on how extended we are on the shorter term time frames once that resistance breaks. But the fact that it's a double top does have us paying extra attention because it's more clear to more traders when it does break. That's when we get the follow through. So Litecoin is not a daily inside bar. Again, there's no volume behind today's candlestick. Tons of indecision in the way that it's traded, but this is a lot of pullback. We have pulled back significantly. I stopped out a half of my position on Litecoin in the low 80s to ensure that I protected some profit in case we did see the general fade that we're used to seeing at this point. So must hold support is 77.72, and we can see a clear 4-hour lower high, a couple of them. The most recent one at 81.39. Hourly time frame, if you want to find more resistance levels, seeing one here at 79.38. So it all depends on your game plan and what you're doing. If you are trading with a midterm mindset using the daily chart and the 4-hour chart, and if you're day trading, you're still using the hourly chart. The bears are comfortable as long as the hourly chart is continuing to form lower highs, and the bulls are not comfortable until we break the hourly lower highs and see a bull break, ideally, of the daily inside bar heading into tomorrow. BCH USD, bullish reversal candlestick on the weekly. Daily time frame topped out at 785 resistance. Same thing, inside bar, no volume. 4-hour time frame, fairly contained consolidation. 716.18 is support. Resistance is 753.80 and 764. And we zoom into the hourly time frame, and we can see some more resistance levels for lower highs on this hourly time frame from today to be keeping an eye out on. And again, bears have control as long as those lower highs do hold. So top fishing plays or bottom fishing plays. Bears have favor for top fishing plays where if we make a move and we don't break the hourly lower high pattern, they enter a bearish position and they put their stop if the hourly lower highs break or if the 4-hour lower highs break if they want to give it some more space. For the bulls, the only play, it's not comfortable here because the only play the bulls really have is to enter a position, if not already in one, and hope the low of consolidation holds. Because again, if the low of consolidation holds, we do have that one level on Bitcoin here, that other support from the initial little bull flag, but there's not a lot of clear support levels to be using. And of course, there's a lack of support in this multiple $100 range here on the initial bull break up. So the bears still have comfortability because they have more levels to be playing with and more levels to be basing their trades off of, whereas the bulls, once we break a couple more support levels, we're floating in space, and that's not a comfortable spot to enter a trade and have favorable risk to reward because you don't have any supports that you're essentially playing off of. So bears still have the short-term favor because of that fact and the comfortability. And just checking in on these shorts at this point, because this shorts chart has been covering a decent amount and it's still just fading away. Not a whole lot to see there at this point. If we do see another leg up, we would expect another leg down here. And if we do drop and fade back down, I would expect the shorts to start increasing again if we do see daily inside bar bear breaks. So these daily inside bars, it's currently 3:25 p.m. So we have 3 or 4 more hours until they close. And then we'll be watching to see how they break tomorrow, noting very clearly that the 4-hour trend and the hourly trends have to change. Again, it's swimming upstream for these bulls. They have to prove themselves on these shorter term time frames to be looking for that daily continuation. So bears comfortable, bulls be picky, be choosy, and don't just assume that the bulls are going to hit the low and follow through now, because we absolutely could see another leg down. We have cooled off enough RSI levels that is a possibility. And just looking at the daily RSI at this point, it's cooled off into the low 40s. I don't expect to just drop straight down to the double bottom low. I would expect a low, a lower high, and then to head back down to the lows, just because, again, the size of the bounce, we would have to see a news event, in my opinion, to see a straight drop back down to that support. So it's essentially we're either going to see bullish continuation or a slow fade this week into back down towards that support. So that's that. Hope you're all having a good weekend and holidays. We got Canada tomorrow has off. We've got the US Tuesday and Wednesday with the holiday, the 4th of July. Checking back in on the road trip. Again, I am not on this road trip right now. A lot of people continue to get confused, this was 5 years ago. But we're now in Canyonlands National Park near Arches in Utah, and beautiful views there. It's almost like, you know, it looks similar to the Grand Canyon. Obviously, the Grand Canyon's a bit more magnificent in scope, but these canyons that are just, and these are the spots that the Native Americans carved in with their hands or rocks or whatever for footholds as they were scaling in and out of these rocks. But Canyonlands, this is a meteor where it hit, and these colors, it doesn't show justice here on the camera, but you know, blues and greens and just crazy different colors and designs, and the erosion of this soft rock and sand is making really cool patterns, and just really cool to imagine that a meteor hit in this spot. And Canyonlands, in terms of the sunsets, probably some of the best sunsets on the entire road trip. Again, it just looks like a painting, this flat plateau, and then it just drops off into this canyon, but it's so vast compared to where you're standing, it just doesn't even look real. And you can see all different angles, the way that the sunlight hits the rocks at different angles and casts all the different shadows. Pretty incredible spot to be. So Canyonlands, hit that up, and Arches at the same time, definitely worth it. And two very significantly different national parks, just in terms of the structures that you're looking at, the geological structures and the rocks and things. Next is Valley of the Gods in Utah as well. Just another BLM land. You know, do whatever you want as long as you're not a jerk. Camp wherever you want. Dirt roads, nobody around anywhere. And this was like going back, you know, all the old Western movies that they film. This is, you know, the setting reminded me of that, where it's just these big pillars of rocks. And Valley of the Gods, obviously it held some religious ceremonial aspects for the Native Americans, and how could it not when, you know, you have these monster rocks in crazy patterns and shapes from the way that they've eroded over time all over the place. So it's another spot you just explore around and can do whatever you want and pitch your tent on the side of the road. Next, I went to Natural Bridges National Monument. So similar to Arches, but a little bit different. And this was a valley with a really cool trail and these big, you know, archways. And this was probably one of the most lost that I've gotten on a trail in my life. Not the kind of lost where you think you're going to die, but the kind of lost where you're like, oh, I might have to sleep out in the middle of nowhere with none of my stuff and no food, not enough food, until tomorrow, until I can find my way. But fortunately, I eventually found my way out. I had to scale the canyon walls, which was a little bit sketchy, but ended up having to walk about 20 miles and got home just at dark. A little bit scary, but this is a really cool insect. I don't know what kind of moth it is, but I had never seen it before, and it was really difficult for me to determine whether it was a hummingbird or a moth. Just the way that they fly is very different than any insects that I'm used to seeing. And some more archways. I think this was the last picture I took when I knew where I was on the trail before losing it. And just had to hike up, and it was about 8 miles out of the way. And eventually found a road and followed it back, but had to scale out of a canyon, which was not safe. This is Gooseneck State Park in Texas, I believe. This is the border of Texas. Might be wrong on that, double check that. But again, just incredible erosion of these rocks over time, and this river snaking its way through. And it's just the kind of spot where you pull off and pitch a tent. My tent was maybe, 50 feet behind where I'm standing right now. And to be able to just watch the sunset and sunrise there with nobody around is really cool. And then Capitol Reef National Park. So just another one with really cool geology and different, levels of the rocks and how they formed through time. And just crazy epic drives and roads winding through these rock structures. Definitely felt like I was in Jurassic Park again with these huge archways, it almost looked like, and it looked like a huge fort with, a big gate where the road comes through. And that's that. After that, I believe I went on to Vegas and was wrapping up the road trip at that point. Played poker in Vegas, stayed with a buddy. My buddy's still out there. He plays professionally. He was number 2 out in Vegas online for a really long time. And actually he was number 1 and then got dethroned to number 2. But I went and stayed out with him for maybe a month or so and played poker as well. did pretty well enough to then fund it right into my stock account. So I've been compounding poker gains, playing tournaments in college. Every profit that I won, aside from keeping a stack to play with, I would just ship it right back to my stock account and trade with it. And the biggest difference between, and I'll still do a poker and technical analysis comparison video at some point, but the biggest difference between the two is if I were to just, use my profits for poker and step my game up and play bigger tournaments and, $500 tournaments, $1,000 tournaments, the competition gets harder. It's a harder game. Whereas if I'm doing that in stocks and I'm increasing my position size, it's the exact same game. It's the same trades. That's why I like stocks, and that's why I chose stocks to pursue rather than poker, because I do believe that compounding profits is way more beneficial in the stock world than it is in the poker world. So we'll touch on Vegas in the next one and wrap up the road trip. I appreciate you all watching. I hope you have a good rest of your weekend. Happy, safe holidays out there. Don't do anything dumb. Enjoy your family. Enjoy the sun, hopefully. And we'll see what tomorrow brings with this daily inside bar. And the inside bar is not, all or nothing, because if we close this daily candlestick and we're right down near the low of the day, it's really the 4-hour chart and whether we see a high volume flush. And these hourly candlesticks, this was, they're a little concerning. This was a bit concerning with the amount of bear volume there. But the bulls are seeing these dips where they're buying. It's not like the bears are running away with it. And we scroll back to the previous times, and it's usually significant bear volume that tells us, okay, bulls lost it, bears back in full control. So keep an eye out for that bear volume spike and a lack of bulls buying the dip after that bear volume spike. You can see they did buy this little dip here. So if we don't see the bulls buying that dip, again, that's the red flag. And we're going to have a tight hourly pattern here, attempting a higher low, trying to break the lower highs. 63.44 resistance and support 62.59. That's the tightest range that I'd be watching right now. Thanks again. We'll see you tomorrow.